Today on the Brisbane Property Podcast, we are going to be investigating the influence of foreign investment activity on the Brisbane property market over the last 10 years. We've seen some significant shifts in legislative change in terms of the Foreign Investment Review Board, and this is shaping the involvement that foreign buyers are having in our market. We hope you enjoy this episode.
Welcome to the Brisbane Property Podcast with your hosts Melinda and Scott Jennison.
Hi, everyone, and welcome back to another episode of the Brisbane Property Podcast with Scott and Melinda Jennison.
Yes, welcome back, everybody. I'm actually a little bit surprised, Scott. We haven't had a weather update from you in your intro for quite some time, but I'm sure that you're wanting to let everybody know that in Brisbane at the moment, it's not sunny and warm.
I think I jumped in a few weeks ago and talked about the weather, but we've actually had a fair bit of rain in Brisbane lately. Well, it feels like a lot for us. Hot weather. We've had a lot of storms, and we've actually had a little bit of rain, which is probably a bit unusual for this time of year. But I'm not saying it's cooling down. It's still quite warm, but we are getting a little bit more rain than we're used to. So, a bit of a change from what we're used to up here in beautiful sunny Brisbane.
That's right. Look, I thought that some of our listeners who are regulars would have been missing your little weather update at the beginning. So we thought we'd start this episode there. But we're going to move right on because in this episode today, we're going to be talking about how foreign investment in Brisbane has helped to shape the property market. We're going to take a walk down history's lane. We're going to look back at what's happened in the past and also a lot of the changes in the regulatory framework that has restricted foreign investment in more recent years and what that means for the Brisbane market as we look forward into the future.
I guess the lead in for the weather probably led a little bit to that because, you know, what makes people come to Brisbane? I mean, it's a growing city, the lifestyle, the economy. We've got, as we talk about, and we will talk about for the next how many ever years it is, the Olympic Games coming up in 2032. So, look, it does pull people towards Brisbane. We've seen a lot through the COVID side of things where we obviously our borders did shut internationally, but we've seen a lot of migration from Sydney and Melbourne, especially people wanting to move into Brisbane. But yeah, the foreign investment side of it, interesting part. We did see a lot in the years past. We're probably seeing a little bit less now than we have. And we'll jump in and we'll go through some of the information why we might be seeing that.
Yeah, the impact of foreigners investing in Brisbane has contributed to some segments of the market moving in different ways at different times historically. So especially in the high end and the inner city residential markets, especially in the high density space. Now, a lot of overseas buyers, especially from countries like China, have really contributed to the demand for certain property types looking back at different times in history. And that's also helped to shape the Brisbane market as it is today. So we're going to sort of take a look back over the last 10 years to see what was happening back in 2014, what's changed over that time and what's actually happening now so that we can then predict what the likely impact of foreign investment is going to be on the Brisbane property market into the future.
So if we look back on that, say, 2014 to 2017 sort of time frame, in those days we were actually in the construction industry, building developments ourselves, and on the back of right in amongst that, towards the end of it, was probably the last big development that we did, which was a block of 7 units that we built and sold those units. At that time, there was a high level of construction happening. So there's a lot of cranes in the air. Building construction was at a really high level. And we probably saw a lot of overseas investing happening at that time.
Yes, this time frame also aligned with the release of the Brisbane City Plan in 2014. That is the current planning scheme. And at that time, we saw a lot of inner city industrial land being rezoned into high density and medium density residential land. So over the years that followed, we saw a lot of the warehousing that was being removed, and it was being replaced with high-density residential dwellings. The skyline in Brisbane did change a lot after the 2014 city plan update, but this also aligned with a time where we saw a noticeable increase in foreign investment after that 2014 city plan change. Now, of course, at that time, the allure of Brisbane was such that there was obviously a desirable lifestyle. People were very happy to have a holiday home in Brisbane if they were living overseas. We had a stable economy. Property prices were actually a lot lower compared to the likes of Sydney and Melbourne. So Brisbane was actually a prime target for a lot of foreign investors at that time. So it also coincided with a broader property boom that was occurring Australia-wide. So overseas investors were very keen to tap into the Australian market, and Brisbane was actually a prime opportunity for them, simply because there was a lot of high-rise development taking place, and they had the opportunity to buy brand new properties off the plan. And this is where we saw a lot of foreign investors getting into the market here in Brisbane.
Yeah, I as you touched on there, I think the affordability was a huge thing. Back at that time, what you could buy units for, especially in the Hamilton and the inner city areas down on the river, that was compared to Sydney and Melbourne. It was so cheap, which is why the foreign investors, as you said, beautiful conditions. Why wouldn't you want to get a place in Brisbane when they were going out that cheap? But obviously then that has an impact on the local buyers.
Look, it does. But if we just sort of loop back to the process of bringing a development to the market, when a builder or a developer is looking to build a high density unit complex, most of the time they will require investment and off the plan sales to take place prior to that project commencing. And a lot of the funding that a developer will obtain from banks and financiers will be dependent upon a certain volume of those units being sold off the plan, so that there's guaranteed income upon completion for a part of that project. And of course, this is the area in which foreign investors were really playing a big role here in Brisbane. There was a lot of those foreign investors buying off the plan, providing that certainty for developers upon completion that they would have a certain level of income at the time of handover. Now, of course, what happened between when those projects were commencing and also when those projects were completing is a large volume of units and complexes in the high density space were being built concurrently, and therefore a lot of the valuations upon completion actually were lower than the original contract amount when these investors were buying off the plan. So regardless of that, those investors still needed to settle, and therefore it really propped up the market, given that the foreign investors have had already placed a foothold, if you like, in buying part of the project, and they had to complete upon settlement, whereas some local buyers upon completion were able to purchase those properties at a reduced amount. So this is just some of the risk associated with buying off the plan, and foreign investors were able to invest their money to get projects started, and that's one of the reasons why we saw this huge construction boom, because of the volume of foreign investors at that time. And just to quantify that, for example, back in 2014 to 2015, across Australia, the share of foreign investors or foreign buyers that were purchasing new property was in excess of 15% of all buyers. So that's a really high market share. Now compare that with foreign buyers in Queensland, as at the Q2 2024 of just this year, new foreign investment in Queensland dropped to 4.8% for new products, and for established, just 2% of buyers. So there's a really big difference in the volume of foreign investors in the market today compared to 10 years ago.
It's interesting that for people that don't understand that pre-sales that you basically have to do as a developer, that was something that it's very, very common. You'll go to the bank to borrow the money for the property. You'll look at doing the development. You'll have your margins and your profit side of things, but then they will probably set a level of pre-sales. You won't be able to start the job until you get those properties under contract and have them pre-sold. Obviously, a level of risk. from a buyer, as Melinda talked about. There's that valuation risk, making sure the builders actually finish it. We weren't probably seeing builders go under like we have lately. So back at that time, builders probably a bit more stable. Construction costs were a little bit more stable. We've had a massive change in the last few years where construction prices have gone up. People have started projects, builder can't finish them, and then they're left without a product that's not even finished. So there's that level of risk when people go to buy something that's off the plan, as you said, for a pre-sale for developers to get started on a building complex.
So, of course, between 2014 and around 2017, we saw a lot of foreign investors propping up that segment of the market. It was really helping to get building commencements started because they were able to provide those developers with certainty of that income upon completion. Now, of course, there were some concerns from locals because that extra demand actually pushed prices up, and obviously that meant that for some locals, affordability became an issue. But as I've pointed out throughout that project timeline, the market demand, that is the balance between the number of properties that were available for sale at the time of completion versus the demand that was in the market at that time, it was in favour of the seller, in favour of the buyer. And what that meant is that there was downward pressure on prices. There was more stock available for sale and fewer buyers in the market. And we saw that play out here in Brisbane, where a lot of those new products were being sold below or being valued below the price that was being paid in the off-the-plan contracts. Additionally, what we saw here in Brisbane was a period of time where those developers were looking for any form of income for the completed product. We had situations where some tenants were being offered up to 6 months rent free. They were being offered incentives through products and special offers to actually come and rent some of these brand new properties that had been built. And the reason for that is that they simply could not sell the properties for a price that they were comfortable to achieve. So that caused a sudden spike in vacancy in the inner city housing market because a lot of the tenants relocated to the brand new product where incentives were being provided. So you can see just how much some of these changes off the back of the city plan upgrade in 2014, how that did impact the market here in Brisbane and what that flow-on effect looked like in the years that followed.
Yeah, it definitely had an impact on the local buyers. Obviously, prices were pushed upwards, but it definitely had a big change on it. And then obviously after that, we've had a bit of a tightening of regulations.
So from about 2017, the Foreign Investment Review Board, which is an Australian government department, they began introducing stricter regulations to reduce the level or the amount of foreign influence on the housing market across all of Australia. And so this was a response off the back of the fact that there was a high volume of foreign investment and some locals could no longer afford to purchase. So it was a way to try and control the number of foreign investors in the market to give local home buyers and first home buyers more of an opportunity to get into our local market. So there were a few things that the Foreign Investment Review Board tightened up or started to tighten up from 2017 onward. First of all, they had higher application fees that were introduced for foreign investors. They also increased stamp duty, a state government fee. So there were stamp duty surcharges for foreign buyers, and there were more stringent Foreign Investment Review Board approvals put in place. So foreign buyers were required to seek approval before purchasing residential properties, and there were limitations on purchasing established properties in the Australian market. And of course, this really slowed down the amount of foreign investment that occurred across Australia, but definitely also here in Brisbane.
Which definitely had an impact on the developers. The developers you've got to understand, the developers are relying on these investors to come in, as we talked about, pre-sales, off-the-plan purchases, things like that. That's what the developers were looking for, to have the property secured under contract, then they could actually proceed with the buildings. So then what's happened is the developers relying on that, they've lost their foreign investors. It pushes the pressure on them. At the end of the day, if it's not going to stack up, the developers will probably say, well, I won't worry about doing it. And then the cranes drop out of the skies and we start to lose that. So we had an oversupply. and then we lose the buyers, obviously the developers go, well, I'm going to tighten up. I won't move into that space now. They might look to move somewhere else to do a different type of developments, and then we lose the properties.
Yeah, it's been an interesting turn of events, and potentially our current situation is a consequence of many factors, but one perhaps related to the fact that foreign investors are no longer able to buy off the plan without significant financial penalties applying, and therefore the demand for those off the plan sales has really plummeted. Of course, for developers now, there's a whole host of additional challenges that they face here in Brisbane. The supply of developable land, of course, being one of those restrictions, and the cost to buy those sites. But additionally, as Scott's pointed out, the increased construction costs over the past 4 or 5 years, significantly impacting on the ability for developers to deliver a finished product to the market. We're also in a higher interest rate environment, so the cost for developers is actually higher to deliver some of these products. And we find ourselves right now in Brisbane in a situation where the premium that you need to pay for a brand new high density apartment is significantly higher than the established market price. And because of that, it's very hard for developers to take the risk to build these products on the back of inflated prices. And they simply don't have the local buyer demand who are purchasing off the plan to get a lot of these projects up and running to satisfy their finance requirements. And of course, some of that has come off the back of some faulty building work that's been reported across the country, especially in the high density building space. We'll all remember for a very long time the Opal Towers story in Sydney, and this is something that buyers locally are much more aware of, and therefore, they're really wanting to touch and feel and see the finished product and not rely on those off the plan sales as much. Not suggesting that there's not some reputable developers out there that are continuing to do well with those off the plan sales, but broadly speaking, we've certainly seen a slowdown in that space because the foreign investors are no longer part of that market.
I think what it does is also it reduces your pool of people you're going to sell to, because the shift now has gone from the foreign investors to your local buyers in your local market side of things. I mean, look, Australians generally like a bit more room. We've always had that, they like their house on their block of land and things like that. Units have not probably been the trend. Obviously, of late, that market's changed a lot, and we've seen that market perform incredibly over the last few years. But losing that foreign side of it, again, as you say, we're relying on the local buyers. That higher end product, there are some great developments happening. You look down in Brisbane at the moment, you just go down towards the river there, where there's a couple of big developments happening right next to the Regatta Hotel opposite there. There's some huge, and they've got views of the city, views of the river, spectacular buildings. But again, the pool of people that will buy them, you're relying on your locals as opposed to your international investors. A lot of it because of the cost. So the cost to get in and the entry costs, which we'll go through in a bit more detail as well.
So where are we now in relation to foreign investment rules? Well, right now, at the time of recording, it is unlawful for a foreign person to invest in Australian property without first obtaining approval from the Foreign Investment Review Board, unless the purchase is an exempt purchase. And there's a few areas which would be described as an exempt purchase. So if basically you don't have to apply for Foreign Investment Review Board approval if you're buying a property which you will reside together with your spouse or de facto partner. If your spouse or de facto partner is buying with you, they must be an Australian citizen or a permanent resident. So that's the crucial part. And the property must be held together with your spouse or de facto partner as joint tenants. It cannot be held as tenants in common. So again, there's some technicalities around this. And for people that are foreigners looking to invest or buy in Australia, it's absolutely critical that you get advice from the Foreign Investment Review Board before you purchase, because if you get it wrong, there can be penalties that will apply.
Some interesting, tight, really, restrictions on that side of things. Which obviously, they've done it for a reason, to tighten that side of things up. And obviously, there's ways that people can look at it. As Melinda said, get some advice if that's something you're interested in, to make sure that you can, if you want to buy into the Brisbane market, that you can actually apply for it as well.
And for any foreign investors out there, you may be wondering, when is the right time to apply to Ferb, or the Foreign Investment Review Board, for the approval. We would always recommend to do that upfront before you buy. If you do enter a contract of sale, so you purchase a property, we feel it is important that you may consider inserting a special condition to protect yourself in the instance that your approval is not granted by the Foreign Investment Review Board. So it's not guaranteed, it's an application process, but you can enter a contract and have a special condition to cover you, to ensure that that Foreign Investment Review Board approval is granted prior to that sale becoming unconditional. However, as we've pointed out, it's becoming more and more prohibitive for foreign buyers to purchase property in Australia, but certainly we're seeing a slowdown in the volume of investment from foreigners here in Brisbane. If we look at some of the fees that are applicable, for example, back in December 2023, the government announced changes to the foreign investment framework, and the idea was to increase housing stock. And of course, the federal government knows that we are in a housing crisis, so they're doing everything to encourage more local investment and decrease demand from foreign buyers, so that they're not buying the properties that locals, and especially those that are first home buyers, may be looking to purchase. So some of these updates included tripling the foreign investment fees for the purchase of established homes. So they actually made it 3 times more expensive in relation to the application fees for buying residential established property in Australia. Now, if I'm to give you some numbers, for example, a purchase of $1 million or less, the previous application fee for foreign investors was $14,100. Now, the new regulations have tripled that amount. It's $42,300 for a foreign investor in their application fees alone. That's a significant deterrent to buy property here in Australia. Now, if you're looking at a property between $1 and $2 million, that fee's gone from $28,200 to $84,600, and that scale continues to increase depending on the property value. These are big numbers and big fees that apply, and the whole idea is to deter foreign investors from buying property that would otherwise be available for local buyers. One of the other fees that has recently been implemented is doubling the vacancy fee for all foreign-owned dwellings that have been purchased since May 2017. Now, what do we mean by vacancy fees? Basically, if a property that a foreign investor holds is not occupied for at least 6 months of the year, they will be charged an annual vacancy fee, which is ordinarily the same amount that they paid for the foreign investment application fees. Again, these are huge deterrents for people that may be residing overseas as foreigners and buying investments and leaving them unoccupied here in Australia. And the whole idea is to encourage them to make these properties available for locals who need a home. Also, with the additional fees that apply, we've also got some of the, well, to give you an example, of some of the vacancy fees for a purchase of $1 million or less. The current vacancy fee around $14,100. For a new dwelling, that has increased to $28,200, but for an established dwelling, as high as $84,600 for a property valued at $1 million or less. So it just makes it so prohibitive to hold these types of properties.
You can tell why then it's come back to the local side of it. And look at, post-COVID, obviously it's just international travel was one thing, but obviously then having these changes and these restrictions, it's really changed the the outlook and how Brisbane will reshape. And obviously the foreign investment side of it, I think, will be restricted quite a lot, especially with some of those fees. They're amazing, the difference what they were.
And even, at a state government level, back when Labor were in office. The Treasurer at that time, Cameron Dick, actually handed down the state budget back in June 2024. And in the speech, he stated that Queensland would bring its foreign owner transfer duty surcharge into line with Victoria and New South Wales, being at 8% stamp duty surcharge. That's the amount that foreign investors will pay in addition to standard stamp duty requirements. And, the other thing that was announced at that time is that the foreign owner land tax surcharge would increase to 3%. So the whole idea is various levels of government, both at a federal level and also at a state level, there are more and more deterrents being put in place to minimise the volume of foreign investment here in Brisbane. And that enables the maximisation of those properties to be available to local buyers. And that is the reason why a lot of these deterrents have been put in place. And it is part of the reason why we no longer see those higher volumes of foreign investors buying off the plan, which has the detrimental effect of not enabling some of those higher density developments to get up and running and get out of the ground. So, there's definitely pros and cons to what's happening out there.
Yeah, I mean, look, not pushing away from the foreign investment side of it, the pressure we've got on construction at the moment. We don't have the trades up here in Queensland, especially southeast Queensland. We are about to go into more infrastructure with new developments and new buildings and more infrastructure actually happening in the lead up to 2032. So that pressure on that construction side of it, let alone having more of the foreign investment side of it to build more units and so on. Look, I think that's probably something we probably don't need the pressure at the moment to build those types of things. So looking ahead, obviously there'll probably be further decline with giving the tightening of regulations.
Look, very likely that the volume of foreign investors will continue to dwindle. Just so many additional costs that they pay over and above a local buyer that they may look elsewhere for investing. Of course, when these sorts of deterrents are put in place, we see other creative ways for foreigners to be buying property that's local here in Australia. And, providing one family member has residency, we're seeing it ourselves a lot of the time that family member can accrue a number of properties in their own name, and obviously the money from foreign investors can be filtered through in a legal way through an individual that may actually legally be able to purchase property without the consequences of Foreign Investment Review Board requirements. So, there's potentially ways that foreigners are still able to purchase property here in Brisbane and certainly across the country, given the impact that has now been placed on them to to invest directly in the traditional way.
Yeah, and domestic buyers, obviously that's going to be a focus. Most of the local market is obviously your local and interstate buyers. Obviously foreign investors still playing a smaller part, but still involved in it. But obviously, especially in the wake of the taxes and the fees that are involved in those restrictions.
Yeah, look, and as I said, I think just off the back of the more recent announcements at a federal level and also at a state level, the number of foreign buyers in Queensland dropped to 4.8% in Q2 2024. In Q1 for new housing, that was at 7.6%. So that's a big decline, and we expect that trend will continue. And for established dwellings, in Q2, the number of foreign investments was just 2%. In Q1, that was 4%. So just in the last 6 months here in Brisbane or in Queensland as a whole, we've seen a significant shift downward in the volume of foreign investors. And we do expect that will have an impact on reducing the number of foreign investors in the market as a whole, but also providing more options for local buyers in the market.
It'll also have an influence on the developers, on what they do, what the product they actually turn out, because they're going to rely a lot more on the local side of things. Owner occupiers, downsizers, domestic investors, those types of things. So it'll have an influence on what the developers actually build and the product they build. When you look at how big they go and what sort of capacity they involve in that, how many units they put on a complex and things like that. That'll have a big impact on what the developers actually do in this space as well.
Yeah, and look, we've already seen evidence of that where they're no longer building investment stock that really just appeals to those overseas investors, which are typical 2-bed, 2-bath, 1-car, high density inner city units with quite a small floor plan. Instead, developers are looking to build much larger 2-bedroom, 2-bathroom floor plans that appeal to a downsizer market. And the product type is quite different. And we're seeing that shift already occurring in some of the projects that are coming to completion across Brisbane now. And that's simply because the target market has shifted and there's definitely more demand from the downsizers that are looking for those high density markets, as opposed to some of those investors, and especially foreign investors that may have been happier with the alternative product type. When they're not in the market, developers need to react and change.
Excellent. Well, that's a little bit of a wrap there on the foreign investment side of it and the role that it plays in the Brisbane property market. Hopefully that's been helpful. And as usual, I will let Melinda wrap it up as I normally do. Keep listening to the podcast. Tell your friends all about it. We've got guests coming on. We've got more great information to help people out. If you've got any questions, don't be afraid to drop any questions in. We'll have a Q&A coming up as well in the next few weeks. So, I'll let Melinda wrap it up as usual. Thanks very much for listening. Take care and bye for now.
As always, we hope you have enjoyed this episode. And if you feel that this is going to be beneficial for any of your friends and family, please share the episode with friends and family so that they too can learn about the influence of foreign investment here in Brisbane. We would love for you to show your appreciation for the content that we produce by leaving us a review on whatever podcast player you're listening to. It also helps others to find our content and benefit from the information that we share. We hope you have a fabulous week. And until next week, bye for now.